One of the key drivers of inflation, by extension, of course, high interest rates, is the high price of gas, which is a key source of energy in Australia, but also critical in the manufacture of fertiliser, which of course feeds into food prices. Now, part of the problem is not enough gas supply, plenty in the ground, of course, just not enough being extracted. So how is it then that the Albanese government and the federal court are making it almost impossible for companies to bring down these prices by exploring for and extracting more Australian gas? Just last week, a key federal court ruling is likely to delay Woodside's massive $16 billion Scarborough gas project off the West Australian coast after the regulator found it had wrongly approved a seismic survey because of, quote, inadequate consultation with Indigenous Australians. Now, the ramifications here are profound. As I mentioned at the top of the show, why invest in Australian oil and gas if your project could be scrapped at the last minute, despite spending tens, perhaps hundreds of millions of dollars on geological reports and surveys and feasibility, all the while having climate activists, of course, protesting outside your office, even your home, in the case of the Woodside CEO. Joining me now to get the latest on this, energy market analyst Saul Kavonic. Saul, welcome to the program. Now, correct me if I'm wrong here, but it appears to me that at least the climate activists who want to end fossil fuels immediately, it seems that they have hijacked Indigenous consultation requirements to hold back and potentially cancel new investments. Investments, of course, which would make our power prices cheaper. How true is that?
Well, unfortunately, it's very true. And this isn't a matter of approvals being cancelled at the last minute. This is actually approvals already given. And it's beyond the last minute because now we're seeing projects that have already started construction being halted halfway through. You know, to give a sense of what's at stake here, we're talking about tens of billions of dollars in investment, even more in future tax revenue, tens of thousands of high-paying union blue-collar jobs. And it's creating a perverse outcome for many Indigenous communities where they're suffering from consultation fatigue. You can imagine what we're seeing here is thousands of kilometres of coastline where consultation needs to be undertaken. And the companies are doing this with all the relevant Indigenous community bodies and native title bodies, etc. But all these green activists need to do is find a single person amongst the tens of thousands of Indigenous people there. And this person, even if they choose to make it even deliberately difficult to consult with, they're then coming after the fact, after the approval is given, and seeing injunctions being brought. And then people right now, there are people out offshore in hazardous jobs waiting to get started and then being forced to sit there and wait while we go through a court process. And this is a deliberate, sophisticated strategy of green litigation that's been imported from America to Australia to kill projects by 1,000 cuts. And the industry here, but as far away as our trade partners in Japan, are flabbergasted that the government has sat by and just let this happen. Because these are projects the government supports. These are projects that the regulator has approved. And it's frankly just a matter of an unworkable consultation requirement, which needs to be clarified. Consultation is clearly required, but you just have to have a consultation way of doing things, which actually allows you to get to a decision and then move forward. And we don't have that anymore. And in fact, the government's not only sitting on its hands and not fixing this, but they're actively funding the green litigation outfit, the Environmental Defenders Office, to bring litigation against their own regulator to halt these projects. And industry's getting to the point where they're asking, does the government want these projects to go forward or not? If it does, it needs to fix things here. And if it doesn't, it should just be honest about it and say so, rather than saying they support it, but then trying to actually undermine it in their actions behind the scenes.
Well, we know gas in particular, I mean, all resources are critical to the budget bottom line, but gas is critical to the bottom line and to our ability to deal with the transition ahead of us. We absolutely need gas. We need gas to fulfil supply contracts overseas. Again, that helps us pay for things like Medicare and hospitals and all the other things we want in a first world economy, but we need gas to actually power our own economy. If you were an international player and you could put your money in any country, surely this is going to make it less likely boards around the world would choose Australia for investment.
We are absolutely seeing the risk profile in Australia rise, and we're seeing foreign investment drop as a result. It's happening very quietly, but let's be clear, it was only a few weeks ago I heard from a major international investor in Australia. They've downgraded Australia from tier 1 status down to the status that they put with emerging economies, for example, like Nigeria. That's 50 years of a reputation built in Australia that's been lost in a matter of 6 months. And that's because this issue here with the approvals is just the latest and most serious assault across a range of assaults we've seen on our gas sector under the new government over the last 12 months, which has crossed East Coast gas policy, gas price caps, gas export controls, sudden retrospective tax changes and industrial relations reforms. And when you put this suite of challenges together, it just makes it much more difficult for foreign companies to invest here. And unfortunately, that investment is dropping quietly, but really it's a real issue and we will feel it for decades to come.
Look, just before we go, I spoke to a lot of people last week about the issue of transport diesel costs escalating quite rapidly, I think 23% in recent months. Give us a sense, why are we seeing this surge in oil prices?
Well, what's happened globally is it's all about not just OPEC, but CHOPEC, where China's driving demand. We're seeing green shoots out of China, which is pushing up demand for oil and oil products. And at the same time, OPEC, led by the Saudis, is cutting production. And many Western economies, including the United States and Australia, have allowed these foreign and sometimes non-aligned countries to have complete control over both supply and demand. And there's now structural deficits forecast for the next 18 months, and hence prices continue to rise.
Terrific analysis there. Saul, thank you for your time.